So Thomas says, Mike, can you go over buying VIX calls when you think the market looks bearish? How many calls and at what strike and time period? And an idea on potential trade management, scaling out ETC. How do you use PowerOptions assisting in search for the appropriate VIX calls? Okay. Now, I'm going to, real quick, Thomas, because I'm not going to probably go in depth into this discussion. I've got a few more questions that are here. So, sorry, I apologize. Right, back to YouTube. So again, just on our YouTube channel, Thomas, so you can see some more in-depth discussion here. VIX. Let's go ahead and do that. And of course, you'll see some of the ideas we have. Not that one. It's now 4 years ago. That's not the one I'm looking for. Not that one. Okay, look at VIX. Okay, here you go. 1 year ago, discussion on VIX call buying. This was, I'm sorry, like 21 minutes long. So that's probably the one where I go most in depth into my approach of what I used for what we use for VIX calls. We're going to review it, but this is the one that's most in depth. From a year ago, a discussion on VIX call buying, and we take a look at what our approaches are and so forth. There's some other ones here for portfolio insurance. No, not that one. VIX trades as a market hedge for 4 months ago. Okay, so those are the two you look at. This one's 13 minutes long, but the in-depth one. And this one's not too bad either from a year ago. Identifying calls in the VIX. I think those were back to back. So we did this one, discussion on VIX call buying, and this identifying calls on VIX was a follow-up. All right. So my approach, and Ernie has a slightly different approach, but what I've been doing over the years, and let me just go to VIX here, and let's go to the chart. 2022 was probably the best year that I had with VIX. This approach I was using as a market hedge. So let's just go back 3 years. 2021 was kind of at fault, right? 2021 was a melt-up market. It wasn't really that profitable to do in this case. But I'm going back 3 years here. So let's go back to, that's 23 and that's 22. 22 was a good year as well, too. You see a lot of jumps up in the VIX. Let's just go to 2022. Why not? Let's go custom. And 1/1/2022, or 1/4/2022, I apologize, to December 30th. All right. That's a little better, isn't it? Now, this one was tougher to gauge. But then I didn't show it. But remember in the old days, back in 2021, in the melt-up market after 2020, the VIX spent a lot of time hovering in ranges we hadn't seen since probably about 2018. We were in the 11s for extended period of time. And that was just a straight melt-up market, melt-up market, melt-up market kind of thing. All right. Now, this was much different. Why am I bringing that up? Because typically, what I look for to enter the VIX calls, Thomas, is when the VIX is usually around 12 or mid-12s, or maybe a little bit lower, which has been rare recently, I understand. Here, it was difficult. This year was difficult to time this because it never hit that level. But as you mentioned at the same time, when I start seeing the bearish sell warnings on the market sentiment tool and power options, I apologize, and we were in sort of these areas, I moved it up to about 17 or 18. You had to. And then, of course, you got a pop. And then you got a big pop. All right? So that's what I was typically looking for. Ernie follows most of my webinars, but it skipped his mind that I have presented those VIX call discussions several times, and I mention it when we talk about the bull put credit spreads. I use the VIX calls mainly to hedge the calendar spreads and the bull put credit spreads in my portfolio. The married puts, the 50% of my portfolio is married puts. That's already hedged. Don't need to worry about it. But the VIX calls are usually done for just the oops, what if moment that the market suddenly drops down 4% in the morning. The bull puts might be near 40 or 50% of their loss, of the maximum loss. Because having those VIX calls there counters it. And in some cases, it countered it very well and paid for the loss I took on the bull puts. Very rare occasion. Now, Ernie said, hey, Mike, I've been trying to play around with these VIX calls for the past couple of months. I said, okay, Ernie, I've been doing it for the past 5 years. That's good. Ernie's is a little bit tighter, though. Higher, excuse me. he usually buys VIX calls. He's looking at around the 1350 to 14 range, which makes sense with more recent market conditions and things of that nature. He's more actively looking to buy based on uncertainty in the market that he's aware is going to be coming out with with the economic reports and everything going on, new news every day about what's going on, different things up and down. So that's what he's looking to do. He's going to be around 13. If the VIX is at 1350 or 14, he's going to buy it. I said, okay, I can agree with that, but I'm going to look for it to be a little bit more to 13 to that 1250 range I wanted. And when I see the market sentiment tools start to go into sell warnings, but when I see 2 bearish sell warnings in a row, I'm buying calls right away. Okay. And we haven't seen the bearish sell warnings twice in a row. I don't think we've seen the strong bearish sell warnings recently, even though we've had some pullbacks, but we had sell warnings. So let's look at the overall sentiment history. Yeah, the 23rd and the 22nd. And, we saw some pullback, but not real significant, but a couple hundred points. And last sell warning that we had light buy was in 1220. Yeah, we had that. But what did we have before that? 1 or 2 other sell warnings when we were at 60.90. And then, where were we? 10 days, 15 days later, we're at 58.67. A sell warning here, sort of recovered from that, but went right back down. Yeah, so I'm trying to look for a couple more, but I haven't seen the strong bearish sell warnings in a while. Back to, July. I apologize, folks. It's back in July. Oh, shoot, I went way too far. Sorry, guys. Let me shorten this up here. There we go. Let's go back to July. Yeah, so that's when we had the strong bearish sell warnings. And you see in this case, we were up at about 56.50, and we came back down to 52. And we did have some here, too. We were right about it, back up to 56. Again, the sell warning started at 2 in a row and then a third, and we dropped back down to 54. Okay, when we had the light buys here at the peak, well, that went right back up from 52 to 56. So, okay, just going back to that, I use that in conjunction. What calls do I look for? Let's go to long call. Let's go to search. I might even have it still saved from that discussion a year ago. My long calls, VIX and volatility hedge long calls. All right. What are my criteria? What do I look for? It's almost the same that Ernie looks for, Thomas. I like to go about 30 to 75 days out. Ernie's probably close. He's about the same. He's probably 30 to 60. I go 75 in some cases in case there's not a 65. Am I okay with the April VIX calls? Maybe, but I'd have to see. Now, I want a price of less than $1.30, and I look for a 0.3 delta or less. That's typically what I'm looking for. In general, I'm buying about 8 to 10 calls on the volatility when I buy them at a time. The idea is to represent only about 1 or 2% of my total portfolio, maybe as high as 3% of my total portfolio, to help hedge that 15% of my portfolio that's in the bull put credit spreads. I'm not doing this to make a daily profit. I'm not doing this to profit long-term on the VIX. Ernie's trying to do that. I only do this when I see those warnings go off, or as you mentioned, it's a good play if you feel it's a bearish market or a bearish turn is coming. If, not using the market sentiment tools, your own thoughts, that's great. Okay. But that's the structure we look for. Usually a midpoint less than 135. I usually like to keep it around $1 if possible, which was very easy to do. Actually, it was about 70 cents or 60 cents when the VIX was in the 12 and 11 ranges consistently. It was easy to find those when you started seeing the bearish sell warnings. Now that the average of the VIX is more around 13 or 14, yeah, $1.10, $1.20, that's more realistic for a 0.3 delta, 40 to 75 days out in time. That's really all the criteria I use. Yeah, I should put in some option volume and open interest as well, but that's what we're looking for in those cases, okay? Yeah, I want the delta of 0.3 or less because it's speculative, but it's a speculative hedge because I'm expecting stuff to hit the fan, potentially. Once I see those bearish sell warnings in the next 8 to 10 days or so, that's what I'm expecting to see. So I'm using an out-of-the-money option with a cheaper price instead of at the money. And Ernie's about the same. He's looking for the same almost delta of 0.3 in that case, 0.35 to 0.25, I think his is. And I'm using 0.3 or less. So, you see here now it's a little bit difficult. These are out to the 34 strikes. Let's go back to the VIX charts, and let's, instead of custom, let's go to that let's go to 1 month. All right, great. I went a little bit longer. Let's go 2 months. My apologies, Thomas. Okay, perfect. Here we see a buy range. And was this January 8th? No. January 8th, I had bought VIX calls because we were where? Right in that 1350 range. It was actually a little bit lower, I think, the day before. So we were under that 13 range. So bought calls here. Saw this little move up. Not a lot. Now, I think this time I only had 6 calls, Thomas, but I'm gonna say, let's say I had 8 calls. What do we typically see with the VIX, especially in these recent markets? You have your jump, and then you quickly come back down. Okay. On this day, even though I probably didn't pick the best price, on this spike, I sold half. That first big move, and I'm not talking about this gradual move up here, the first time you see something close to a 70, 80% or more profit on your VIX calls, I sold half. I sold 4 calls of the 8 I had. Let's say, I think I had 6, but we'll just keep it. We had 8 calls here on the 8th of January, sold 4 on the first spike, came back down and started to come back down, and I sold half of what was left here when it started to decay back down. So I sold another 2. So now I have 2 calls left, and these were for February expiration. And I had 2 left, and I left it here. I was considering buying some more down in this range, but it came back up, and I decided to close it here. So essentially, you're looking at something, I can't even remember what the numbers was. It was whether 157 or 175. Let's just say 157. I took a 157 profit here. I took 82% profit on these 2 calls here, I think. And this was like a 40% profit from the original purchase price here on the VIX calls. I was holding 16 calls, 16 strikes, I'm sorry, for February, if I'm not mistaken. But then I was out. And then the VIX is just trading up here at 21. So what am I not doing? I'm not buying VIX calls right now. Am I buying VIX puts? No, because they're too expensive because the volatility is too high. So I just don't do anything at this point. And it comes back down to this range. I considered it, missed it, was down here, considered it, missed it. I haven't gotten back in yet because I'm looking for this range. And like I said, Ernie might have bought in this range in the last 2 times. I did not. But in the beginning of January, when we show those sell warnings come up, January 8th is when I bought them. 8 calls, 16 strikes. Sold half on that first move, sold 4 of them. Sold 2 as it started to pull back, held 2, got out here. Yes. Would I have made a bigger profit, 157% or 175% total, had I just sold all of them right here? Absolutely. Absolutely. But what if it kept going up the next day and the next 2 days, right? I need to get this. What if it suddenly, and you can see it here, what if it suddenly spikes up like it did here? Let's say I did manage to get good calls here. At 14, I probably would have bought the 18 strikes. We had this spike here. Hey, I might have been at a 52, 50. No, I probably would have been closer to 92 or 100% profit here, right? But I didn't close it because I thought it was going to go higher. Oh, but no, the market says, we're here. And I'm almost back to only a 5%, 6%. Oh, back up to 25, 35% profit. Right now, I'm only at a 5% profit. I always try to sell half at that first spike because it does have a tendency to settle back down. Oh, some other news. I'm going to settle back down. Oh, some other news. I'm going to settle back down. So if you're playing that game, you got to take advantage of when there's some news. You got to take it off. I take half off the table at that time. That's what I look for in the VIX calls. That's the simple search that I use because I know I'm only looking at VIX calls. But if there's 110 results here. Let's go to page 4. Oh, there they are. Yeah. So this search that I looked at is not looking at any lists. Oh, I did. I'm sorry. I apologize. I sincerely apologize, Thomas. I created a stock list for volatility. I did do that. Let's take a look here. Create and modify lists. What is my volatility list? It's just VIX, UVXY, and VXX. Okay, so buying calls on those. Sometimes I might just buy shares directly of UVXY if the VIX is too high priced at the time. All right, but that's a review. I think we just covered that in about 17 minutes. But again, more full discussion here is looked at on that YouTube The one from 1 year ago that we saw, and I do have a full playlist, by the way, on discussions on volatility and applied volatility options, but a discussion on VIX call buying from a year ago, and I think the follow-up, identifying calls on the VIX or other volatility ETFs to buy. I think that's when we created that search and that list, Thomas, we just looked at, and that's 13 minutes long. But that's what I'm looking for. Again, 40 to 75 days out in time, a little bit under $1.30, $1.50, delta of less than 0.3. I'd prefer to buy calls on the VIX when the VIX is below 13. It's at 1250 or so. Ernie's looking at below 14. Okay. And in that case, you know what it is. And I think Ernie's trying to make it successful more on daily trade, not daily trading that we were talking about earlier from Mike, but make it a trading plan to always profit on the VIX calls. There's nothing wrong with that. I do not always have VIX calls open. Okay. I do it when I start to see the bearish sell mornings and the VIX is below those levels. That's when I look to buy the calls on the VIX. 40 to 75 days out, 0.3 delta or less, a little bit of a midpoint. As Paul mentioned, Paul R mentioned, maybe I should be doing a little bit more volume and open interest for these positions when we're looking at them. There was something on that July. I want to go back, I think it was to January 8th in a second. We're going to look at the chain of the VIX from January 8th. There was something phenomenal that I saw, and I think Ernie went into these and I went into the different ones. Now look at the VIX. Let's go to the chain. Well, let's go back to January 8th. Might have been before that, but I know I bought on the 8th. But Ernie and I might have had this discussion before that. So just bear with me 1 second. We know there was that big event coming up, right? And I can't remember. I think it was the 22nd. And, oh, I'm sorry. Let me just go to calls only. Apologies, everyone. Yeah. The volume, that's what it was. VIX was at 17, so it might have been I was looking at the 7th, I think. Let me go to the previous day, folks, but you can already see it there. Something was weird looking at the chain. We're going to compare it in just a moment. There we go. On January 7th, 2025, started to see those sell warnings, started to have the thoughts that Thomas brought up. VIX was at 1782, a little bit higher than naturally a lot higher than I like to look at it. Open interest. This is going to relate to Patrick's question in a moment. This is our open interest. This is the daily volume. And this is the previous option volume. These numbers started to show outstanding. The 20 strike, 11,000 contracts traded the day before, 7,900 traded today, a total open interest of 261,691 contracts for January 22nd expiration. Why is that important? January 15th, same day. It's a factor of almost 100 less for the volume in the open interest. There was reports coming out. There was the Fed meeting and everything. Everything on the 22nd and the 29th just had this massive open interest volume, and everyone was 157,000 at the 21 strike, 204,000 open interest at the 22 strike, 76,000 at the 23 strike. I mean, these numbers were just outstandingly ridiculous. And it just, yeah, so that's the expiration we both took. We went to the January 22nd expiration. I think the 29th was huge too. Let's take a look here. No, that was lower. It was all, yeah, it was. Maybe it was the next day, but yeah, everything there. The January 22nd volume and open interest, a factor of almost 100, 1,000 greater than the two expirations 1 week apart from it. Okay, so this is our target. We're just sitting there on Teams, especially like, this is our target. This one's priced at 107. I think I'm going to go with the 19. He says, yeah, I think I'm going to go with the 28 or the 23. I think he went with the 22. And we're just like, it's just too much. There's everyone's speculating here. And these could have been spreads, of course, but I think everyone was just speculating on raw buys. And the fact that the week prior and the week after, there was no activity, This is where the money was flowing to. This is where the hedges were flowing to. That's where it was. So is there anything right now? Let's go to current. And yeah, minimal here for 19 days out. What about February 19th? Factor of 10 or 15 higher on February 19th compared to the 19th. What about February 12th? What about next week? Nothing. I mean, it's good numbers. 551 per 1800, 2445. 13,152, 21,027 current volume, 175,000 open interest at the 17 strike. 191,000 open interest with 6,000 volume today at the 18. 203,000 open interest at the 19 strike at 85 cents. That's an interesting one. My delta's not at 0.3. Is it? Delta's not at 0.3. Oh, it's at 0.19. Okay, I don't know. Am I on the right date? Am I on current? Yep, I can't make those noises. I'm not making a recommendation or suggestion, but that looks, this one here too, I can't fault that. 103 at the 18 strike. A lot of volume and open interest, and my delta at 0.3. But this one here at 85 cents, 203,000 open interest. Hey, is it a spread? Are they buying calls here and selling calls here because they think volatility is going to come back down? It's a possibility. But 12 days left, 85 cents, 103. All right, let's go to add to portfolio, long call. And this is not a recommendation or suggestion to buy or trade. This is just based on that search that I ran and seeing that, let's just do 5, I want to keep it an even number because I do have, so we'll just keep it at 8. We use the midpoint at 85. I'm going to track the other one too. Let's do an exercise here. What was my other big one? The 18 strike at 103. Put that in the portfolio for our February 7th, 2025. We'll do 8 contracts on that one as well. All right. All right. Okay. Fantastic. All right, so we're going to start tracking these. $824 into the 18 strike, $680 into the 19 strike. 8 contracts apiece. We'll see how these play out day by day over the next 2 weeks. Well, yeah, 2 weeks roughly. Remember, they expire on Wednesday. I'm sorry, it's not the Friday expiration. It's a Wednesday expiration. So 12 days. All right, let's see what happens. We had the delta. I'm going to have to jot that down later. We'll do a different sort of discussion on that later on as well.